Well, the Bank of England's done exactly what the markets were expecting in raising interest rates by 75 basis points, up from 2.25% to 3%. Now, it's the biggest single jump that we've seen in more than 30 years. As I said, it was widely expected, but subsequent to this decision, we've seen more flesh put on the bones coming through from the press conference. Going into the press conference, we knew that 7 of the 9 voting members voted to raise rates by 75 basis points. 1 voted to raise rates by 50 basis points, and 1 still voted to raise interest rates by 0.25%. But I think it's most telling looking at what's happened subsequently in the press conference, because Andrew Bailey was talking and he was saying that if the Bank of England does not act forcefully now, it will be a lot worse later on. He said that we can't make promises as a voting committee about future interest rates, but based on where we stand today, we think bank rates will have to go up by less than currently priced in by the financial markets. The unfortunate thing is that we're going to spend much, if not all of next year in recession, looking at the start of recession coming through in the fourth quarter of this year with a contraction of GDP by a margin of 0.5%. Now, the Bank of England forecasts the country's GDP to decline by that margin in the third quarter this year, going through into the fourth quarter in recession, and then throughout next year down in contraction. Let's take a look at how this market has been traded, because we've got sterling down, and you can see if you look at today's candle, it continues to fall. We're now trading below the 112 level, 111.78, not too far away now from this red dotted line, which was the base established back on the 12th of October when we saw that recovery on from the quasi-Kwarteng fiscal statement we saw. The unfortunate thing is the Bank of England is acting without any knowledge of what the Treasury is thinking. Jeremy Hunt is coming through with his fiscal statement in a week or two's time. But we've seen pressure building for sterling, not just against the US dollar, but also against the euro. You can see almost pretty much at the bottom of that candle. So whichever way you cut it, it's been negative for sterling. But if anything, base rates may not have to go as high as previously thought. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.